Hey everyone, this is Steve Good and welcome to our next episode of the Coin Chat. Today's episode is called Crypto for Dummies, and I'm joined by my friend Chas Gessner. Chas is a former NFL football player and now launching a medical concierge service called VitalityRX.com. Chas, welcome to the channel.
Thank you. Thank you for having me. I appreciate it. I don't know if I should be insulted by being the first dummy on your podcast.
I'm sure it has nothing to do with being an ex-NFL football player.
Yeah, the CTE sometimes clouds my judgment.
So before we jump into talking about what Crypto for Dummies means, I've got to ask you a question. Just for all of our listeners out there, you were a football player. NFL is a big thing, and you've got this amazing ring on your finger. Do you want to just quickly tell people what that ring is?
Well, my rookie year, I played for the New England Patriots, and so I was fortunate enough to be a part of a world championship team and win a Super Bowl ring with them, which was a pretty crazy experience. But looking back on it, just really great to be a part of something like that and be witness to an organization that has kind of figured out how to win and win consistently and just be around greatness. Has definitely carried throughout my life since then. Amazing.
So let's jump in. You've got a bunch of questions that you were asking me about crypto, and look, it's an honor to have you on the chat today. So let's jump in. Where do you want to jump with? Just fire away.
Well, first of all, let me ask you this question: Am I allowed to curse on this podcast? Are we speaking freely?
We can speak reasonably freely is fine. Go for it. I don't think there's too many people under 18 interested in investing in Bitcoin yet. Except for Jamie Dimon's daughter, of course, and that, we won't talk about his daughter investing and fraud because that's a whole topic for another set of dummies, not today's dummies.
Sounds good. I figured the best thing that I could maybe start with is kind of give you my dummy explanation of what I think crypto is and what I think Bitcoin is, because maybe it's probably a pretty common view, and then maybe you can kind of shed some light on from an expert's point of view. So the way I understand it is that there's basically a master ledger that everybody participates in the network, buys however much they want onto that master ledger. And then people can basically exchange that currency, whatever it is, whether it be Bitcoin or some other coin, without having to go through a bank. So there's no intermediary, and there's no actual transaction fees or transaction, requirements to go through.
Okay, so and then, just to clarify on that one, so there really is an intermediary, and that's what mining is about. So the intermediary is effectively the transaction that takes place where you send the Bitcoin from your wallet to mine. And in the process of doing that, it goes through the Bitcoin network, which is actually, there's an algorithm that's running in the background for that particular coin. So when you send the money from you to me and it runs through the Bitcoin network, it's the miners that are effectively running that transaction and confirming it. And in the process of doing that, they're actually taking a fee for that transaction as well. So that's how the miners are making their money, is a transaction fee, which is what's paying for them to keep the transactions and the processes running. Now, that's not the only method for mining, but it's one of the main ones. That's called proof of work. There's another method, which is proof of stake, which is where a whole bunch of people put their individual computers as nodes onto the network, and they're using those computers as verification and validations of the transaction. So in either case, there's a fee that's associated with the transaction, and it varies from coin to coin.
Gotcha. That makes sense. So for the miners, how is there a finite supply of miners? Can anybody kind of jump on and mine, and then they become part of that network, and they become part of the checks and balances?
Yeah, so you can have as many miners. There's no limit to the number of miners. Of course, the more miners you might have, there's sort of two parts. One is the more miners that you end up with, the faster that the overall transactions should go, because you have more people validating and calculating. At least in theory, that's the way it should work. And the second part is that the more miners there are, the more that the fees are distributed across more people. So, of course, there's an element, I suppose you could say, of, because I have my own mine running at home, I would prefer if there weren't too many more people adding into mining Ethereum, because the more people that there are, the harder it is for me to make money, because it's distributed more widely across other miners rather than, going to me.
That makes sense. And if, okay, so I know with Bitcoin, there's a finite amount of coins that are going to be released on the network. And so that's what's incentivizing, these miners to mine the actual coins. And then you're also saying that the miners, are getting paid a percentage of the transactions that they're taking part in. So what happens when, is that the same for all of the other coins, or is that just Bitcoin that's releasing a finite amount of coins? And then what happens when that process is done?
So there is normally a finite supply of coins per coin. Some companies could, I presume, mint additional coins if they needed to release additional coins for various purposes of operating their business or liquidity, much the way a company could issue additional shares in the market for running their business. But for the most part, coins usually have a finite supply. And that supply of coins is really released automatically through the processes that are defined around how that coin is set up, not being released by the miners themselves. So the miners are making their money purely on the basis of the transactions that are taking place. So they're not selling coins as part of the transaction process. The coins are slow released themselves by each phase in which the coins are mined. So it's a process that's defined algorithmically. So essentially, yes, there's a fixed number of coins, but that doesn't really matter much for the miners. I mean, the main thing is that the more coins that have been released, the harder it is for the miners to make money. But the flip side is the more transactions that there are, the more the miners would make. So theoretically, it should work out that the miners are making the same, or at least the same over time, and potentially more over time if there's more transactions running and if the transaction speeds are faster, because of course the biggest limiting factor would be how long a transaction takes. So if the transactions are slow, the miners won't make as much, and if the transactions are faster, they'll make more. So those are the kind of factors at play.
Gotcha. So the miners are kind of taking the place of the bank, so to speak, in terms of being the intermediary.
Exactly. It's a settlement. So the typical bank has a settlement and confirmation process. And typically that settlement takes what they say is like T+2, which is, 2 days from when you've done the transaction. But in coin terms, transactions are taking place within minutes or, hours at the most. And that's really done by way of deciding how many confirmations must be confirmed, or how many blocks have to be confirmed before a transaction is finalized. So, and I've talked about this in a previous episode about the definition of a blockchain. So each block is a confirmation that takes place over a number of transactions. And when you have a number of blocks that are done together, it's a chain. So if a particular transaction has to be confirmed 6 times, then it will be confirmed across 6 blocks. And on the 6th block, when the confirmation is validated again, the transaction is finalized, at which point the receiver then receives their coins. So that's what's happening in the miner world. Is there's a whole bunch of people computers validating each and every block. And as those blocks are confirmed, and the final block is confirmed for whichever transaction, then the transaction is finalized. It's at that point where the miner makes his money, is at the confirmation stage.
Okay, gotcha. So that kind of makes sense as far as what Bitcoin actually is. Now, let me ask you what are the applications? So the way I understand it is that Bitcoin is just one type of coin, and then there's obviously a lot of other different types of coins. Now, were these coins all created for different applications? So, I think people tend to think of crypto, or the dummies like me tend to think of crypto as something that they've got into because they see the value in trading it and holding and buying and holding.
Right.
But I think people don't really understand the applications as much, or why there's all these different coins and what they actually do. So could you maybe shed a little bit of light on that?
Yeah. So there are a lot of, so one of the questions I get asked a lot is, why do we need 1,000 different currencies to replace the several hundred we have on the planet already? And the answer is, well, that's actually not what's really taking place, because most of these coins are actually companies, and they do cover quite a range of different services, products, and value propositions that sit across finance, medical and pharmaceutical, various forms of services in terms of travel. They cover other things like just being pure currency. Of course, some of them do that as well. So advertising, media, television, content curation like Steam or Steemit. So what you'll find is that a lot of these coins are actually just companies, but the way that the coin companies operate is by creating a coin or minting a coin, and that coin becomes effectively used as what's called the token economy. So the token economy or the coin economy is effectively that to operate or use the platform of that company, you need the coin to use in that platform to use it. So some of the companies will use the coins as transaction fees. Some of them use the coins as a fee for services. And there's a whole range of different ways that the coins are used. At the same time, every one of these coins is also found on exchanges where you can buy and sell the coins, as you mentioned, like investors. And then equally, I could send you any one of these coins as a store of value. So for example, I could send you TenX Pay coins, or I could send you ADX coins, which is an advertising company, and TenX is a finance company. I could send you any one of these coins if I owed you, $100, which thankfully I don't, because I know you'd be on my case about it every day. But if I owed you $100, I could send you an equivalent amount of TenX or ADX or any other token, and you could then go ahead and convert that to Bitcoin and then to dollar or whatever you wanted to do. So the interesting thing about it is that these tokens or coins are used as value. They're used as a mechanism for transacting within the platform, and they can be used as shares in the sense of being traded on exchanges all at the same time.
That's interesting. And you and I were talking about this another time. We were talking about that paradigm shift of people being able to see these coins as something not only to trade and hold on to, but to use, and like you were just saying. But you touched on another little thing that I want to ask you more about. And you said if somebody pays you in a coin like 10x, and you want to actually cash that money out, then you transfer that 10x into Bitcoin. So my understanding is that Bitcoin is kind of the underlying currency that's almost like the gold standard, and then everything has to be transferred in and out of that.
Yeah. So what's really interesting about Bitcoin is that I'll kind of compare it to a national currency for a moment. So if you go to any particular country, that country operates on a single currency. In Sweden, it's Swedish crowns, and in Japan, it's the yen, and in India, it's rupee, and of course, in the U.S., it's U.S. dollars. And interestingly, some other countries have also started using U.S. dollars as their national currency as well, like Ecuador, for example, which is kind of unusual and interesting. But in the main, every country has its own currency. Now, in the world of cryptocurrency, the underlying global currency for every platform is Bitcoin. And that's interesting because it means that you need to have Bitcoin first, and then you use the Bitcoin for everything else you do, whether it's for buying, predominantly Bitcoin for buying goods and services, or for mining online with mining platforms, or for being able to trade other coins. And it's the primary coin. There are other coins you can use, but the primary one is Bitcoin. The secondary and second most popular coin used is Ethereum. But if you go to pretty much every platform out there, actually all platforms in cryptocurrency will have Bitcoin for sure as their primary currency, but will typically have something else as well that you can use.
Gotcha. And so I keep kind of coming back to this because I think for me, in my opinion, which doesn't mean much probably, but in my opinion, I think that the one barrier, or not necessarily a barrier, but I think as this becomes more and more of a reality, is when Bitcoin or crypto is going to become more and more adopted, is when people start understanding more about actually using this. And it's not just the people that are trying to invest in it and make some money. So let's say I, wanted to pay someone, or I was receiving a payment and it was in one of those other altcoins and not Bitcoin. Is there a way to very quickly, but I'm holding Bitcoin, is there a way to very quickly transfer it into that altcoin and then pay the business in that way? Or is there a way for the business to pay me in that coin and then very quickly transfer it to the Bitcoin?
So you're talking about switching back and forth between the coin and fiat currency like USD? Or are you talking about exchanging, for example, Dash to Bitcoin and back?
Yeah, I think kind of both, right? Because I think, it's really hard for us right now to not speak in terms of dollars, because that's what we know. And I know eventually that could potentially go away. So when we're talking about it theoretically, we don't necessarily have to talk about fiat, but I think it's important to include fiat in the conversation right now.
So the thing is, if I have Dash coins, then the thing is I'll have Dash coins in my Dash wallet. And if I need to send you Dash coins, then you need to have a Dash wallet as well. So that's one factor. But if you wanted me to send you Bitcoin, then of course I would have to transfer the Dash coins to Bitcoin first and then send them to you. So the easiest way to do that is on a number of exchanges that are out there. I think there's around 90 or so exchanges out there globally. The more popular ones people have heard of are exchanges like Poloniex and Bittrex in the US, or there's BitThumb or CoinOne in Korea. There's HitBTC that's based out of Europe. And there's a number of others. So there's tons of exchanges. So it's not very hard to just get yourself set up on an exchange, deposit your coins to a single exchange, and then using that exchange, you would effectively sell one to buy the other. So you could swap your Dash to Bitcoin. The other way you can do it is there's platforms like Shapeshift and Changely where you literally make a request to swap coins from one to another, much the way you would do if you went to the airport and said, oh, I want to buy some rupees before I go to India, so I'm going to go in there with my dollars and I'm going to give them the dollars, they're going to give me rupees, and I walk out with rupees. And that's effectively what Changely and Shapeshift do, is they remove the barriers by saying, okay, so Steve wants to send Dash to Chas, and so I'm going to go on there and I'm going to say to Changely, I've got the equivalent of $100 worth of Dash, and here's the address where I'm sending it from, and here's Chaz's address in Bitcoin where I want to send it to, and Changely does all the work in the background, and then the money shows up in your account. So those are the two different ways that you can transfer coins between each other pretty seamlessly. So certainly the Changely and Shapeshift way is a really easy, seamless way to do it. It doesn't require any effort at all. It's very, very simple to use their platforms for that purpose. But they don't have every coin, but there's, all the mainstream coins are on those two platforms. So those are, easy ways to do it. If you want to receive money from people, of course, if they have fiat and they want to pay you something, then there are other platforms out there where you can actually have them pay you in a credit card and you receive crypto. The hardest way is to go back the other way around. Typically, you need to use things like Coinbase, for example, or Coinify in Europe, which are effectively going both directions from fiat to Bitcoin and back. And then you need to have the coins in Bitcoin first and then sell the Bitcoin to buy the fiat, usually dollar, euro, pound, for at least US and Europe. And then the money deposits in your bank account. And of course, now you're waiting for anywhere up to 10 days, depending on how long they want to take to give you the cash. Now, the other way you can do it, which is maybe a more comfortable way, would be that instead of having to wait to receive the money that way, you can deposit the money onto a credit card. So there are debit credit cards that I could also wire the money to. So if you said, hey, Steve, send me $100 in Bitcoin, and I'd say, okay, fine, give me the Bitcoin address where I need to send it, I could literally take $100 worth of Bitcoin from any account I have, and you give me the amount to send you. I send it to that wallet address, and it would then show up on your Bitcoin credit card, of which there's a few of them out there. There's Zappo, there's WireX, TenX, there's Monaco's coming out with one shortly, and there's Advanced Cash. So just a couple of examples. But all of those cards effectively do the same thing, where you can just wire the Bitcoin straight to the card, and then you could start spending it on your card rather than waiting for it to show up in a bank account. And the nice thing is it shows up again within an hour or so.
And when you say that goes to a card, or then when you say you spend it with your card, are you spending that as cash? with your card, or you're
exactly.
spending?
So it's like it's literally, it shows up. It's on a debit credit card. You can either have a virtual credit card where you can go online and buy something on Amazon, for example, so you don't actually need the physical card, or you can use the physical card, go into a shop and go to dinner, or do a micro payment or whatever. And it's very quick because it's a normal debit card now where the coins are held, and those debit credit cards they're MasterCard and Visa cards, but they're really debit cards holding those Bitcoins. They usually convert the Bitcoin into cash in advance so that you're able to transact fairly quickly. And they're very effective. It's a great way to do it. It's, they all come with fees and costs, but it's still a lot faster than waiting for something like Coinbase to send the money back to you so that you can do anything. And by the time you've got the money from Coinbase, you may have already done something else, waiting that long for the money to come back.
Yeah, that's awesome. I wasn't aware of that. I think that's really cool. Like I keep saying, I think that just the barrier to adoption is people being able to use this stuff, and that's a really cool application.
What's so cool, I just want to say one thing. What's so cool is this is just the beginning, because there's just so many more things coming out and being developed and coming online, or new ideas and new ways of approaching things that we've only just seen the tip of the iceberg. And, to your point, it is really hard to get started. So these are just the beginnings of what's going to become this new kind of token economy, I guess you could say. Sorry for interrupting. I just wanted to mention that to you.
Yeah, no, I think that's important. That's important to note, is that we're kind of at the beginning of this thing, and it's evolving. And so the idea is to just understand it as much as you can as you go, and then new improvements will continue to be made.
Bigger names are moving in. That's the thing. There's much bigger names of people moving into this space now. So really big name investors are really starting to get involved, and institutional investors are getting involved. So, anyone that might say this is going away, I would say, well, have you talked to Steve Waterhouse, for example, who I had a call with last week? And really interesting guy. He's launching another project that's to create a kind of a free internet to make it available for everybody. And he'll actually be joining us on a podcast in a couple of weeks. So, he's been in the crypto business and in the investment management world for a very long time. And, he's launching a platform to create a free internet for everybody. And there's just a lot of other innovation going on, and there's a lot of really big names moving into the space. So, I can't really see this going anywhere but forwards when you see more and more people getting involved, getting invested, and trying to, redefine how we do things.
Yeah, that's really cool. Speaking of all that too, and you mentioned earlier, and actually using this stuff, you mentioned having a wallet. Can you explain to me how that works, and if I should, if I've gone and I've bought Bitcoin or Litecoin or Ethereum or something on Coinbase, and even if I've gotten past that and I've then moved that onto exchanges and I've bought and sold different altcoins or those coins, should I be keeping those coins somewhere in a wallet? And could you explain that process? Because I think a lot of people don't really understand what that means. They think that they're actually moving a physical coin onto a wallet.
Yeah, so wallets are made out of leather. No. But not for everybody, because some people are, not into leather. They want other forms of material, so we won't be disrespectful to them. Crypto wallet. Yeah, no. So here's the main difference. Between a bank and a wallet, or between a bank account and a wallet. With a bank account, you're putting your money with the bank, and you're trusting that the bank will hold the money for you. Now, with a wallet, it's an electronic signature that basically is saying that your money is yours, and you need to be responsible for holding on to that wallet. It's your responsibility. It's not physical. It's just electronic. And we're going to do another episode that goes into a lot more details about paper wallets and offline wallets and electronic wallets and how to store your money and private keys in a lot more detail with another guest coming up soon. But the highlights are that a wallet is yours. It's your responsibility. The most important thing is you have private keys. Keys are like the keys to your car or your house. You never give them away unless you trust somebody. And even if you trust somebody, I wouldn't give my private keys away because it's my money, and only I should have control of it. So when you have the money the coins put into a variety of wallets, each coin has its own wallet. You can have as many wallets as you like. but it's really important to make sure you have access to those private keys. When you put your money on exchanges, unfortunately, the exchanges oftentimes don't give you access to the private keys, meaning you cannot back up your wallet. It's at the mercy of that exchange. And because of the fact that I said that the exchanges that we typically look at, like Poloniex or Bittrex or BitThumb, are not banks, it means that they're trying to create a sense or a feeling of being your bank, but they're not even backed by the government in the case of failure. So, or if they get hacked. So then your money's just lost. So it's really important to recognize that when you have a wallet, it's the creation of an electronic folder or signature that holds your money. It's connected to the ledger that we talked about earlier. And the relationship between your wallet and the ledger is simply that the account that you have is in the ledger, and when you open up your wallet, it's accessing the ledger to verify how much is still sitting in there.
Gotcha. And can that be hacked?
That can't really be hacked unless you have the private key. And because the private key is such a long string, it's next to impossible to hack. So that's why it's really important to back up your wallet private keys so that they're yours and no one else has access to them. And if you give your private keys out, I've seen scams where people said, hey, something's going on with this particular project. You're going to get a free amount of coins. Just give us your private keys. And of course, that's not the way you receive the money. The way you receive the money is you literally send it to their wallet address. And the wallet address would be like your home address. The keys are what opens up the house. So naturally, you don't want to give out the keys. You just give out the wallet address so people can wire the money to that wallet address. But if you give the keys away, then they're going to go and take the money out of your wallet, and that's it, and it's gone.
Gotcha. So the only way for someone to get those private keys is I'm sure naturally some people are going to ignorantly store that private key somewhere on their computer, as opposed to writing it on a piece of paper and putting it in a safe.
And the tricky part is, who's going to walk around. Sorry, go ahead. I'm sorry.
No, go ahead. I was just saying, if your computer gets hacked and you have your private key saved somewhere in a file on your computer, then that's susceptible, right?
Yeah. The tricky part with this, I'll be honest, I struggle with this too, because if you have it on a piece of paper and you have a fire, well, the paper's not going to last very long. And if you put it in a fire safe and it's sitting in your house and you travel and you need access to the wallet, you're kind of stuck. And if it's sitting on your computer and your computer is stolen, you're also stuck. I'm not saying it's all dire. I'm just saying you have to be a little bit vigilant about how you go about doing this to make sure that you've got redundancy so that you have access to your coins all the time. Chas, this has been a great first session on Crypto for Dummies. I know it's a lot of information to take in and a lot that you've asked. Thank you so much for today. Listen in next week, everyone, where we talk about Crypto for Dummies Part 2 with Chas. It should be a lot of fun, more to cover, a lot more questions coming from Chas. To the moon, until next time.